7 personal loan mistakes that turn an EMI into a punishment. It is around 12 midnight, and a man is sitting alone in his room. On the mobile screen, personal loan approved is glowing, and beneath it there is just one button: accept. Next month's school fees are pending at his home, a credit card bill is outstanding, and a sudden medical expense has disrupted his entire salary planning. He feels that if he just gets the loan, life will get sorted. But he does not know that this easy button of today can become a source of monthly anxiety tomorrow. The fear begins right here. Because as easy as getting a personal loan looks, paying it back the right way can be just as difficult. The curiosity is, which small mistakes turn a normal personal loan into such a burden, where the EMI eats up not just money, but peace of mind as well? A personal loan is an unsecured loan. This means you often do not have to pledge security like a house, gold or property, so the lender trusts your income, credit history, and repayment behavior. This is the reason why a personal loan can be helpful in times of need, but if taken carelessly, it can damage your budget, credit score, and future borrowing capacity. Today, because of digital loan apps, bank offers, and pre-approved messages, taking a loan has become easier than ever before. But easy access does not mean every loan is a right decision. The very first mistake happens when a person chooses a loan amount without accurately assessing their actual need. Seeing an amount higher than what they need, greed takes over the mind. Suppose the need is only for 1 lakh rupees, but the app shows an approved amount of 3 lakhs. Here the borrower thinks that keeping a little extra money will be safe. But extra money is not free. Interest is charged on it, a processing fee might apply, and a higher EMI keeps putting pressure on your budget for several months. It is essential to understand the difference between a need and a want. A medical emergency, education fees, or necessary repairs are one thing, but taking a loan for a lifestyle upgrade can turn into a risky habit. Before taking a loan, one should write down on a simple sheet of paper how much the actual need is, how much one's own savings can help, and which expense can be postponed without a loan. The second big mistake is not planning the EMI properly. Many people look at the loan amount, but they do not look at the EMI in connection with their entire monthly life. The money that comes into the salary account is not entirely available for the EMI. Rent, rations, school fees, transport, insurance, medicines, and small household expenses are already standing there. If the EMI takes away a very large portion of your monthly income, then other needs start shifting to credit cards, overdrafts, or other small loans. The practical rule is to keep the total EMI burden at a level where normal household life does not break down. Many people try to control it at around 40% of their income. Wisdom is also needed while choosing the tenure. In a shorter tenure, the EMI is higher, but the total interest can be lower. A long tenure makes the EMI lighter, but it can increase the total interest. The true balance is created where the EMI is affordable, the emergency fund remains intact, and the loan does not stay stuck to your life for a very long time. The third mistake is not comparing interest rates. In a personal loan, a difference of 1 or 2% looks small, but over several years this very thing can make a difference of thousands of rupees. The borrower often takes a loan from the same bank where they have a salary account because the process feels easy. But an easy process is not always the cheapest option. Along with the interest rate, it is also essential to check the processing fee, documentation charges, insurance add-ons, GST, late fees, and foreclosure terms. The real cost is not hidden in the EMI alone. Today in retail loans, documents like the key fact statement are designed to explain the important points of a loan to the borrower in a simple manner. Skipping them is like putting a blindfold on your own eyes. Understanding the APR, meaning the annual percentage rate, is also useful because it can better show the all-inclusive cost of the loan, not just the interest. The fourth mistake is ignoring prepayment and foreclosure rules. Many borrowers think that when they get a bonus they will close the loan early, but later, looking at the charges can be a shock. In some loans there is a minimum limit for partial prepayment, some have a lock-in period, and in some products the foreclosure charge can be different. The rules of banks for individual borrowers on floating rate term loans can offer different protections, but it is still necessary to read the conditions of every loan product and lender. If you plan to close the loan before time, ask at the time of taking the loan itself whether partial payment is allowed or not, how much the charge is, and what the process is. The fifth mistake is overlooking the credit score. Many people do not check their score before applying for a loan, and then they get surprised seeing a high interest rate. The credit score tells the lender how you have handled loans and credit cards in the past. A good score can help with loan approval and better rates. The right to get a free full credit report from credit information companies every year is important for a borrower because if there are errors in the report, they can be corrected in time. Many times, the status of an old closed loan appears incorrectly in the report. Sometimes a paid account appears active, and sometimes an overdue entry accidentally spoils the score. Checking the report before taking a loan is just like checking the vehicle's brakes before a long journey. A small mistake can cause a big loss later on. The sixth mistake is taking multiple loans at the same time. One personal loan, then a credit card EMI, then buy now pay later, then a consumer durable loan. Gradually the income starts getting divided into pieces. In the beginning, every EMI feels small, but together those same EMIs become a mountain. Then, as soon as the salary arrives, the account starts getting empty. The most dangerous turn comes when a person takes a new loan to pay the EMI of an old loan. This is not relief, it can be the beginning of a debt cycle. If multiple loans are already running, debt consolidation can be considered, but only if the total cost genuinely reduces and repayment discipline remains strong. Getting all loans combined into just one EMI feels good, but if the tenure becomes too long and the interest turns out to be high, the borrower can get stuck again. The seventh and heaviest mistake is not paying the EMI on time. A missed EMI is not just a delay of one day, it can become a stain on your future financial reputation. Late payments can attract penal charges, overdue interest can increase, and a negative mark can appear in your credit history. This can create trouble later in getting a loan, credit card, or home loan. Now, credit information has started updating more rapidly, so repayment discipline is even more important than before. A delay does not remain hidden, it takes its place in the record. The purpose of RBI's penal charges rules is to prevent the burden of unfair penal interest on borrowers, but reasonable penal charges can still apply upon defaulting. Therefore, it is better to keep the EMI date right after the salary date. Small habits like auto debit, calendar reminders, and an account balance buffer can save you from big trouble. An emergency fund is the biggest protection for a personal loan. If you have a buffer of 3 to 6 months of essential expenses, a sudden expense will not immediately push you into a loan trap. If paying the EMI feels difficult in any month, it is better to speak to the lender before the due date passes. Staying silent can make the situation even worse. Communication is not a borrower's weakness, it is a responsibility. Many lenders can explain options like restructuring, a due date change, or temporary support according to their policy. Reading the loan agreement can look boring, but that very document tells the truth of the future. The fees, tenure, default rules, prepayment, and grievance process are all written in it. While taking a digital loan, it is also necessary to pay attention to app permissions and the legitimacy of the lender. Not every platform that gives money quickly is trustworthy. Understand the insurance or add-on being sold with the loan before taking it. If it is optional, do not accept it just under pressure. Every charge increases the total cost. Taking a personal loan while hiding it from the family also increases stress many times. If the household budget is shared, an honest discussion on repayment responsibility can be essential. Making risky investments with borrowed money is even more dangerous. Putting a personal loan into the share market, crypto, or quick profit schemes can become a double risk. If the investment falls, the asset will not even remain, and the EMI will also continue. Therefore, the loan money should be for a need, not for speculation. A personal loan is not always bad. With the right need, right amount, right rate, and a right repayment plan, it can work as a bridge during difficult times. But that same loan, along with bad habits, becomes a financial cage. An amount more than required, a wrong EMI, a high rate, hidden charges, and late payments make it expensive. One should not rush while making a prepayment either. If you do not have an emergency fund, and you put all your savings into closing the loan, the next crisis might demand a new loan again. A smart borrower first clears high-interest debt, then saves an emergency fund, and then makes a strategy to reduce the principal with extra money. A refinance or balance transfer is right only when the processing fee, new rate, remaining tenure, and total savings are clearly visible. A decision should not be taken just by looking at a lower EMI. Keep a copy of every document safe while taking a loan. The sanction letter, repayment schedule KFS, insurance details, and closure letter come in very handy in future disputes. When the loan is fully paid off, it is necessary to get an NOC or loan closure confirmation. Definitely check later whether the closed status has been updated in the credit report or not. Remember that man in the story who was about to press the accept button at night? He paused for a moment, did the calculation, and reduced the loan amount from 3 lakhs to 1.5 lakhs. He kept the EMI after the salary date, checked the credit report, compared the processing fees and accepted the loan only after reading the prepayment conditions. Even after 6 months he had an EMI, but there was no panic, because he had made the loan an emergency support, not a shortcut for lifestyle. This is the real lesson of a personal loan. It is not necessary to be scared of a loan, but taking a loan lightly can cost you very dearly. The borrower who measures the need before the loan, plans the EMI, compares rates, reads charges, checks the credit score, avoids multiple loans and makes payments on time is the one who stays in control. A personal loan can become a path for you and a web as well. The only difference is whether you manage the money or the money started managing you.
If this video has taught you something new, or if you feel this information should reach more people, don't forget to like and share the video. Your small share can become valuable and useful information for someone else. If you have any questions related to this topic, or if you would like to share your opinion with us, be sure to write in the comment box. We read every question and suggestion from you, because your feedback inspires us to create better content. And if you want to keep receiving such interesting and reliable information about business, the economy, and the world in the future, then don't forget to subscribe to our channel GRT Business and also press the bell icon so that you get notifications of every new video directly. At GRT Business, we always strive to provide you with accurate, balanced, and reliable information. Our news and analysis are prepared based on information obtained from various news agencies, public sources, and public opinion. We make every effort to verify and validate each fact as much as possible, but in case of any possible error or dispute, the responsibility lies with the respective sources. Our only aim is to present you with a correct and trustworthy perspective so that you can understand any topic better.